My executive summary report, it will be about Bank of America. It is a bank that is worldwide through the United States and Canada, Asia Pacific, Europe, Middle East, Africa, and Latin America. It is a bank that serves to people, companies, and institutional investors. It's been built since 228. It's been on since 228 years. I am going to start with the takeaways for the first quarter of 2012. It reported earnings of $653.03 for a diluted share. The results included negative valuation adjustments of $4.8 billion plus tax and $0.28 per share, resulting from the narrowing of the company's credit spreads. Capital and liquidity continued to increase at the recorded levels. Capital markets activity improved dining sales and trading results significantly above the fourth quarter of 2011 and in line with the first quarter of 2011. They excluded DVA valuations. All business segments reflect improved profitability from the first quarter of 2011, the lowest provision expense quarter since the third quarter of 2007, as our credit quality continues to improve. The expenses declined on the fourth quarter of 2011, despite higher revenue-related incentive and annual retirement eligible compensation cost. The low level of interest rates continues to be a headwind. Capitalize an opportunity to realize that $1.2 billion of gains on debt and trust preferred purchases. On the following area will be the summary income statement and the selective items. On the first quarter of 2012, summary income statement, it said that the total revenue net of interest expense was $22.5 million during that quarter. However, the non-interest expense was 19.2, pre-tax pre-provision was 3.3. Income before income taxes was 0.9, and the income tax expense was 0.2, which brought the net income to only 0.7. Diluted earnings per share was 0.03. The gain on debt and trust preferred purchases were $1.2 million plus equity investment income 0.8, and gains on sales of debt securities was 0.8. The funding and liquidity for the quarter of 2012, it was in the global excess liquidity sources and time to required funding months. As you can see over here how the parent company, which is the red one, and the broker and dealers are the blue ones, along with the gray one, which is the bank subsidiaries. The time to required funding, it's in the top, which also is in blue. And over here, it is the long-term debt in the bank, which it was, you can see over here in the first quarter of 2011, 434. It went down on the first quarter of 2012, for 355, which means that the global excess liquidity sources grew about 28 billion versus the fourth quarter of 2011 to a record of 406 billion. The parent company and broker-dealer short-term, which are the blue one and the red, unsecured funding was essentially zero in the first quarter of 2012. The total long-term debt declined by 17 billion to 355 billion in the first quarter of 2012, which is here, compared from this one to this one. I am going to be concluding my presentation, my executive summary report with the global banking, which is comparing how it was in millions with the key indicators at the bottom, which were the goals. In the first quarter of 2011, the average loan and leases were about 277,000 million, 0.1, versus the first quarter of 2011, 256.8. Which means that the average loans grew modestly in commercial and also in industrial lending to a large corporate and commercial clients, and were offset by declines in commercial real estate. Thank you.